Welcome to Business Middle East. In this episode, we discuss the apparent recovery following Black Monday. After global markets recorded sharp losses on an ominous day, a wave of cautious recovery saw them regain some of the largest losses since the financial crisis. Black gold spiked suddenly at the end of last week, topping 10%. And there were other factors that contributed to the recovery. The interest rate cut by the People's Bank of China, the release of positive US data, and the entry of opportunistic investors taking advantage of a market trading at lower prices. However, fears linger of another Chinese collapse. So have global markets really recovered, or is there more panic to come? Before analysing these issues, we take a look at market trends after Black Monday.
A kind of calm has returned to the markets after the tornado of Black Monday, but they remain jittery due to the sharp fluctuations coming from China. A mix of expectation and caution is the prevailing mood. The Shanghai Composite Index opened the week with a drop of just over 3% after offsetting a significant part of its losses at closure on Friday. US stocks ended largely even last Friday, influenced by relatively positive economic data. The Dow Jones and the S&P 500 declined by 7.65% and 6.34% respectively on Black Monday. However, they recovered those losses, ending the week up, topping 1%. European stocks ended a turbulent week with modest gains on Friday. Germany's DAX lost over 10% but eventually closed up 5%. Middle East equities had a tough week despite starting in positive territory. Saudi Arabia finished the week close to 2% up, the first positive weekly close after 5 weeks of consecutive declines. Abu Dhabi concluded the period down more than 1%, but had sunk by almost 10% after Black Monday. Dubai and Egypt also closed slightly lower. Oil prices rebounded sharply by more than 16% on Thursday and Friday, posting the biggest daily gains since March 2009.
The sudden fluctuations in the markets were the focus of heavy debate in the financial world last week. The dominant role played by China as the engine of the global economy has blurred the lines for many, who question the strength of its future economic strategies. Yet others remain optimistic. For more on this, joining us now from Abu Dhabi is Nour Eldeen Al Hammoury, Chief Market Strategist at ADS Securities.
نور الدين الحموري كبير استراتيجي الأسواق في ADS Securities.
Welcome, Nour. Let's start with the stock market. A wave of cautious recovery. Can we say that we've exited the panic stations of recent days?
It's possible to say that the panic is over or has at least eased, especially as most of the global equities trimmed their losses incurred on that Black Monday. However, the current rally seems to be cautious, and it's very important to keep an eye on the economic releases ahead, especially those from the US and Asia, which will be the key in the coming days and weeks.
خصوصا الأرقام التي تأتي من آسيا والتي ستلعب الدور الأكبر خلال الفترة القصيرة المقبلة.
What are the levels to watch in the global equities in the coming weeks?
البداية مع سوق شنغهاي.
Well, for the Shanghai Composite Index, traders need to watch the upcoming resistance area standing at 3,373 points, which was breached last week into the downside. The index is trying to retest this area. The outlook remains negative as long as the index stays below that resistance. As for the DAX 30 in Germany, we're looking at 10,500 points and 10,616 points as a solid resistance area, which should be watched very carefully. And there also the outlook remains negative as long as the index stays below that resistance.
How could the economies in the Middle East be affected by sharp fluctuations stemming from China, and how would you describe investors' confidence in the markets.
The panic in Asia could be positive at some point to the region, especially after the Chinese yuan devaluation, as the cost of Chinese goods will be less. Therefore, as long as demand continues from the Middle East, this should be a positive factor for the region, especially if prices keep declining. The GCC region is still safe despite the fact that the uncertainty remains, but rising crude oil eased last week's panic mode, and this is what we've seen at the beginning of the week.
Moving on to the oil markets and the significant hike in prices, can we expect that to continue? And should we focus on the gold-oil ratio?
To explain, the gold-oil ratio is a way of showing how many barrels of oil you can buy when you own an ounce of gold. The pattern that we've seen last week looks like the pattern that we saw in January. Last week, the gold-oil ratio reached the same level as January of around 25.30 before declining again, leading oil to rise significantly on Thursday and Friday. Meanwhile, most of the fundamentals are already priced in, as we have said in previous episodes of the show. Therefore, we need to look at new fundamentals and catalysts that could drive prices in the coming weeks. But for now, all we can say is that signs of stabilization are growing gradually.
Thank you for joining us, Nour. See you next week. That's all for now. Thanks for watching. Have a nice week.